November the 6th, 2015. Time to start another trading today, and today will be the largest news day of the month, unless war breaks out. Open hostilities between China, Russia, and the U.S. or some other place. Unemployment can move the market. It's all down to the news. Unfortunately, there is no liquidity. You can't buy stop or sell stop into the market. So when we look at the market structurally, we've got volume at 2706 and volume at 2627, and we're currently in between those two volume nodes. When the news is as expected and negative, the ZN can move half a point. Normally it moves about 20 to 24, 30 seconds. If it's a surprise, bigger or larger than forecast, rarely a point. The ZB, a point. Of late, when the news has been on forecast, it's been in the 24. But when it's off of forecast, it can move 1 to 1.5 points instantly. So that's what we face. And like I said, there's no liquidity on the opening. We have no range. We had no volatility overnight. The market is poised, looking to make a move out of this 2628, 2630 area. Non-farm payrolls, 190. If it comes in higher than this number, the market should sell. Private non-farm payrolls, 174. The whipsaw comes off the unemployment percentage, forecast at 5%. Quite often we'll have one of the numbers will be better or worse than expected, and it gets you a little whipsaw as the news algos quickly reverse upon the news. Participation, people are starting to pay attention to it, but it's not what moves the market. Non-farm payrolls and unemployment are what move the market. 62.4. As these numbers are all cooked and manipulated, they really don't mean a whole hell of a lot in truth, but the market will react to them. Earnings plus 0.2, and work week 34.5. The market they don't really screw too much with the work week. They haven't been forced to manipulate this number yet, so they'll use this number to confirm the non-farm payroll number right there. So structurally, selling above the 2704 area. So this structurally we have an advantage being a seller at 8 to 12. And the closer to 12, the better. So that's kind of your sell 1 area, then 20 to 24. Sell 2. 16 points off wherever we are to 24 usually is where the market is. On a quiet deal, it can be 12. So really 12 to 24, 30 seconds is where you'd look to fade the move. With that in mind, that takes us down to the 16 to 20 area, buy 1. And then we'll make 4 to 8, buy 2. And that's about all you can do on a day like this. Now, the recommended strategy to do this is let the news hit, enter the market on the first correction with the direction of the news. If the market fails to extend the range, exit. That requires a nimbleness. Sometimes you got 15-20 seconds to come to that decision of where to enter the market. Our volume bars, the mode and the mean, inside the volume bars on F4 will give you the first place, bottom or top of value, second, and then where the news hit the market would be your third entry point. So the way it looks, let's just say the market trades up, and you'll have the mode or the mean. Right here you'll have the value area low, and then you'll have where the news hit. This area right here, you can usually get this on the second bar, but sometimes it's within the first 30 seconds depending on how far the news is away from forecast. So you got a limit buy against that number. That usually will get you filled. Market trades up. If it fails to make a new high, you head for the sidelines and you look to work development. Now if you can't move that quickly, the market moves up. First move down will give you support. Then you should see higher lows into a balance point. If we don't take out that high, you should see lower highs into a balance point. The market comes to balance and you're looking for a new move. And usually on the 10-year, it's plus or minus 230 seconds of this developing value, and that's fairly easy to pick up on quickly. Usually in the first 10-15 minutes we can see where that is on a 10 or 15 minute bar. So it's a different trading situation, and that's what it is. And you know the news, you've got the trade, and to take advantage of that, of the volatility on this market, you got to enter the market before the news is released, and that does carry extra risk. Okay, this is really skewed lower. Right now we're at 13, so 24 would take you up into this 08 area. Let's see, 13, 12, 20, 24 would take us up in this 54. That would be the first sell one, and then a point would take us up into point to point and a half would take us up to 54, 12. To as high as 24, actually 28. That would be sell 2. On the buy side, 54.12, take away 24 points, takes us down to 20. So 16 to 24, buy 1. And then a full point takes us 12, takes us down to 52.28, 53 even. And again, as day traders, as position traders, getting the direction right, it's a different situation. But as a day trader, if you're making 4 to 8:30 seconds on your average winner, you can't come up and risk a point and a half move. It just, the math does not work. You have to sit on the sidelines, in my not so humble opinion. I've been there, and back in the 80s, I mean, when the news hit, it was an instant $1,000 gain or loss, period. And we did some of that, but you never knew exactly what it was going to be. And over time, figured out it wasn't worth the risk. The adrenaline rush was there for sure, but didn't help your bank account very much when you're wrong. And you know, the perversity of trading futures is that it's a hell of a lot easier to lose money than it is to make money. And after a major loss, it takes more time than you think to get it back, because you've expended not only real capital, the physical capital, but you've expended emotional capital too, and that impacts your trading decisions negatively. The trade with the most potential here is to the upside, because the market is heavily sold into this morning's news release. Okay, crude oil is holding. I still think we're going for stops below 45. It should not be. It's never impacted much by this news. So buy 1 will be 44.74, 45. We haven't made it to 45 yet. 45 and a quarter is holding. Then we're going to go down to 44, 44 and a quarter. Buy 2. On the sell side, last rotate up stopped at 45.99. So here we are, 45.75, 46. Sell 1. 46 and a quarter, 46.50. Sell 2. Pretty much where we were yesterday. Looking at gold. We still like that buy in the 1100, 1102. Again, on this one, this thing can move a quick $10. We're going to be at 07, so the 15 to 17 area would be place if you wanted to fade it. Think about doing it, maybe 17 to 20, so sell one right here. Real resistance is at 110. Put a question mark right there. On the buy side, that $10 off takes us down this 95, 97 area for buy one. And we'll make 20, 22, 20, 25, sell two. And 85 to 90 buy two. And you just have to give it a lot of room. We'll come back on the news and we'll make our adjustments. Accordingly. A lot of people, you got to pump the market. You got to sell your services. You got to talk in exaggerated terms and languages to keep people coming back to your site. So this employment report will carry a lot of weight. And there'll be one more unemployment report for the Fed before they make their decision and announcement to us on December the 16th. Okay, if the unemployment number comes in higher than forecast, non-farm, the euro should sell. If it comes in lower than forecast, the euro should get a bounce. Both China and the European Union want to devalue their currencies so they can get an economic advantage for their exports. Okay, here we are. We're at 109. That's still on paper your sell one. This thing, second area would be sell two would be 950. This thing can move a half point pretty quickly off this news. On the buy side, we're at 75. Our 20 to 30 area, so 25. Buy one. Buy two, 50. Put a question mark by that. And then 108 even for buy two. And we'll have to just see where the number is. Like a little more aggressive on the sell side than I am on the buy side because I think it's headed lower. Keep that in mind. Okay, is good news bad news or is bad news good news on the E-mini? I mean, hard to say. Sometimes it trades up with the news, sometimes it doesn't, and that's the case we see right now. So my feeling is if it comes in greater than 190, it should bring bad news. Good news is bad news for the market. It should bring in selling. This market tends to move 10 points. So right now, if we hit the news at 97, we'd be trying. The first place we'd see it stop would be this 7 to 10 area. That would be our sell band. On the buy side, the 85, 87 would be our buy band into the news. Then get through that probably 75 to 80. The economic news pretty well stinks, and I mean, again, overnight when we look at it, Japanese leading economic indicators lower, German industrial production lower, UK industrial production lower, France trade deficit increases, their budget deficit increases. So the news coming out is not good, but this market usually moves a quick 10 points. Okay, non-farm payroll 190, private 174. The whip comes off the unemployment 5%. If it comes in at 5.149, let's say this number came in a little lower and unemployment came in at 4.9, you get a whipsaw off of it. Work week 34.5, and they do look at this number. It doesn't swing the market, it confirms the number. Then earnings plus 0.2, which is the default. Every month it's plus 0.2. So know the numbers, know the news, and you got the trade. To get max benefit out of it, you've got to position before the news hits. And I'll be back with you on the news.